Okay, welcome to the Swing Trading with Cycles channel. We're going to do a review of Amazon today. Just one single stock. It's a huge stock, right? Like over $1 trillion company. And it's getting a lot of attention because of the multi-year lows we're making. And I did have a video earlier, just really a few months back, where I reviewed 13 just sort of marquee names. Amazon was one of them. I will have a link in the description to that video. So definitely check that out. Do note, though, that was before the stock split, so that was when Amazon was trading at much higher prices per share, but it's the same price action. So we'll start with the annual chart, right? So where every candle is an entire year of price action, right? So this is when Amazon opened in 1997. It was a nice green year, and for the next 2 years, we had higher highs, right? Very nice, beautiful, right? 1998, nice big year, right? It opened at 25 cents, closed at $2.68, right? So literally 10x in a year, right? Like opened at 25 cents, closed at $2.68. 10x inside a year. And that's important because if you notice the entire price action, it's all being held up by that one candle, right? Like in 2000, like that decline from the 2000 top actually took it down to a low of, 28 cents. So, excuse me. Yeah, and the low from this candle was 21 cents. We opened at 25. At some point in that year, we dipped to 21 cents, which is obviously a pretty big move down percentage-wise. And so this was like a back test of that low, and then we just kind of moved higher. You then have this kind of level here. Like we're talking like super long term here at like $1.37. This is how you could have used the price action to your advantage back then. This is obviously kind of hindsight. Now, we're like all the way up here in the nosebleeds. And if you kind of zoom into like right here, this is your 2020 candle, right? And this is from the previous video. I think this equivalent level in the previous video was around 1600. It would seem like that's where we're heading, right? So in this case, call it the low 80s. So that's still another 20% down from here. So there was a big gap down like last week, and it went green, and we're gonna zoom in on that lower time frame. But it seems like we probably end up in this area, right? Maybe we even get all the way back to like the mid 70s, right? But that's not that much further down from here, which is helpful, kind of just like big picture frame of reference. So now we'll zoom in, like we were like just at the highest time frame, right? The annual. Let's zoom into the daily chart. So you can see this is your gap down on Friday off that earnings report from Thursday night. And we swept all these lows with that gap down, right? All these lows got taken out. What didn't get taken out is this, that's the yearly level, right? That's the multiple time frame analysis. I hope you're getting that, right? Like the one way of thinking about this is like this entire candle, like, or I should say all of these candles represent that one big candle we just looked at in 2022. And then all of these candles represent the one big candle 2021. And then all these candles represent the one big candle 2020, right? Like that's the idea, right? Like the amalgamation of them. And so this candle gapping down took out all these lows, but we still could take out and sweep these lows, right? That would be making that move down to the low 80s. And so, but notice we kind of rebounded, right? That's a pretty strong move up, right? And so that, could mean that we're setting an intermediate bottom. Could also mean that we're just setting up another lower high for another leg down. We're going to have to wait for more information. Now, what does the weekly chart tell us? The weekly is a bearish outside candle, which tilts us in the direction that we're going to get bearish follow through. At the very least, we know we're going to get an inside candle next week in terms of where we open. Best case scenario, like absolute best case scenario. Because like there's no way like we're going to open above this candle, which is at 121, right? Like think about that, right? That's an important way to gauge the risk reward. Best case scenario, we're somewhere inside this range, this like massive range from this candle, right? Worst case scenario, of course, we experience some kind of gap down kind of situation. Could happen, who knows, right? Like, but, sorry. So, like, this is your range, right? From 121 on the upside to 97, 94 on the downside. We closed at 103. Obviously, we'll see where we open Monday. But that gives you kind of your risk reward for the short term. And you have this yellow line here as your 200-week moving average. We've been closing below it for several weeks, popped above it. Now we've come back below it. You could argue this is our little back test to it, or really, this, I guess, was our little back test, right? That didn't really get even anywhere close. And also, this, we have the bearish cross, right? The 10-week moving average cross below the 200-week. That happened around June. Yikes. So this thing is not looking great, needless to say. But at some point, it's going to turn around, and it's going to be an amazing opportunity. But let's see, what is the market cap? Because that's the thing that you're going to want to pay attention. All right, so the market cap is 1.055 trillion. So that's like, right, so like 1,050,000,000,000, something like that, right? What size company do you think it's going to be? Like 10 trillion? So that's a 10x, right? Like, but 10 trillion is obviously a huge company. That's unprecedented. So that's the way you want to think about it. That's why I tend to, like, if I'm going to look at single stocks, I tend to like focus on mid caps or small caps at the very least. Just to, something that, is maybe worth 2, 3, maybe even 10 billion. Because then it could get to 100. It can get to 50. That's still a lot of upside. Same way you kind of think about like crypto assets. And this is your 50-month moving average, like this teal line. And you can see we've had periods where we dip below it, right? Like significant lows. And then you had periods where we had lows and we didn't really get all the way down there. So now it's going to be your question. We've already spent some time down there. So, like, we've already crossed that criteria off. And so at some point, we're going to get a violent move up. And breaking this cluster of lows, again, like, you can just, everything about this chart suggests, oof. Like, and again, this is not, like, it's good to be aware of the scenarios. Like, you could easily see a move down below, let's say, 70. Like, it's structurally, like, you could see this thing do something like that, right? Like something like this, right? Because we just did this, did that. We could do something like that and that. Maybe even get like, it could be sloppy. Then finally we break out, right? Now that's obviously just totally conjecture, but like, something like that. And then we plunge down to like 70. Then we kind of chop around a little bit and then finally move out. That could be a big opportunity though. Like, because I guess when you think about it, right. But we're at about 1 trillion. So if we drop another, let's say 30%, that gets us down to like 700 billion. I guess that's a way to think about it, right? Like we could get back. Like the trade could be getting back to 1 trillion even is good money, depending on like how much, like what your position size is, obviously. So that's the update I'd say on Amazon. Definitely setting up for something. I think it's setting up for more downside in the near term, but that's going to be a really big opportunity, and that is something I will be keeping an eye on here on this channel. So definitely do subscribe, hit the bell for the notifications, because I will try to give timely updates. But definitely, I definitely give more timely updates than ever on Twitter, just as things are happening in real time if I'm noticing them, and as I said, sort of alerts for myself. So this is going to be a really interesting one. It's definitely a big name that a lot of people are watching, obviously. And I think it's going to be exciting when it finally turns. There's going to be a lot of money to be made. Because Amazon is obviously not going anywhere. And it's going to be very profitable in the future, I imagine.